So market structure shifts and fair value gaps are the reason why your trades feel inconsistent or you feel like you're entering late in the markets. So in this video, I'm going to be going over how to use market structure and fair value gaps with two basic concepts, the volume and the delta. And by incorporating these two things, you can have much higher win rates without getting into positions that don't work. Market structure shift and a fair value gap isn't the entire story, especially when you're trading on the lower time frames. So you can see on the right hand side here, we have a footprint chart and we have the basics of a market structure shift coming off a fair value gap. So your job as a trader is to combine two basic things with market structure shifts and fair value gaps. It is the volume and it is the delta. And so the difference is looking for what's going on inside of the fair value gap or inside your key level and not waiting for an actual break itself. So the truth behind market structure shifts is that it's just a pattern that you see, right? So a market structure shift is quite similar to a flag, a bull flag, a bear flag, other support and resistance patterns, kites patterns, hammerheads, all these different things. The real truth is that order flow is the driver behind all of these moves, and volume will decide whether your move is actually going to play out with high or low conviction, right? Think of delta as, think of order flow as the driver, and the volume that's within order flow, think of that as deciding if it's worthwhile even trading at that level. So first is the delta. So why does a bearish market structure shift actually form, right? So we're just going to go to the charts now and try and understand what's going on here. Why do we get a move like this? So this is now the 29th of December. And so we had fairly low volume here outside of the range, right? Outside of today's high volume area.